You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-exciting Options Insider Radio Network. Hope you guys are enjoying just the explosion of content coming your way throughout the week here. All sorts of good stuff, conversations, chats, new shows, Crypto Rundown. Hope you guys are enjoying that one as well. Episode 3 hitting the network this week. All sorts of fun stuff for you guys to sink your teeth into. And judging by your feedback, you guys certainly are. So glad you're enjoying it out there. Keep listening. Keep streaming. You, of course, can join us live on this show every Friday, noon Central, 1 p.m. Eastern. You know the places. Mixlr, the place to get the live, or go on your favorite platforms, iTunes, your Spotifys, your Stitchers, wherever you like to get your podcast, and you can grab it there after the fact as well. And, of course, however you listen, live after the fact, hit us up. We do indeed enjoy hearing, most of the time, we enjoy hearing from you guys out there. And joining me on the old program today, let's see who we got. Let's spin the Views roulette wheel and see where it lands. Up, it came up 00. That means it must be the greasy meatball, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to VolView, sir.
Good to be here. It is cold. I don't know if you've heard. It is cold in Chicago.
I have heard. I haven't experienced it personally because I'm in a nice warm studio, so I don't do my shows from outside. That would be madness.
Yeah, no, you're missing out on not doing your shows from outside. You'd be. It's amazing. No, it is like 0 degrees. It is like 0 degrees. It's the worst.
My phone says it feels like 10. So there you go. You're obviously misleading us.
Yeah. And guess what? It's going to be colder than that in the coming. It's going to be colder than that in the coming weeks. I think next Wednesday, Mark, the high of the day is going to be -4.
Oh, sweet. A little return of Siberia. You know, I knew they had cursed us. Last couple of winters have been very mild here in Chicago. for your brief Chicago weather report. And they always preceded those by saying it was going to be the worst winter ever. And of course it wasn't. This year they preceded winter by saying it's going to be one of the best winters ever. So I knew once they said that, they had cursed us, and they had indeed, because here we are, already had more snow than we have had in recent years, and now it's getting down to the negatives again, which we haven't seen in quite some time here as well. I know the perception out there, Chicago, this frigid wasteland in wintertime. Spoiler alert, it's kind of not, which is nice for us here. All right, let's keep on rolling right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, welcome to the Vol Review. What's that old saying? It's that fear of the winter that we don't really get that keeps real estate prices so nice and reasonable here in Chicago. So don't bid it all up. Secret. Keep the secret amongst us here. What's not a secret, though, is that the market's it's feeling itself again, feeling its oats a little bit again today. Most of the major indices up, and it kind of depends where you're looking, how much they are up. Dow, kind of the laggard, only up a mere 0.2% or so. S&P up over 0.75%, and the tech-heavy NASDAQ up over 1%, nearly 1.25%. So feeling their oats out there in NASDAQ land today. And, of course, all this green on the screen means that VIX cash relaxing a bit, taking a bit of a break off about a handle again, hovering, flirting around that 18 or so level, which is pretty much unched, slightly higher from where we were this time a week ago. So not a lot going on net week to week here on the vol space, which actually is kind of, as you recall, kind of what I predicted for the vol crystal ball. So hopefully it'll look pretty good by end of showtime here for my prognostication here. And a lot of things move in the market. We'll get to a lot of earnings. Of course, Intel, a big drag on a lot of things out there. Of course, off about 2.5 handles or about 5%, but not enough to drag the markets into the red, clearly. Oh, how things have changed from the from the dot-com 90s, where bad news from Intel would have just annihilated everything. Now these days, the market can soldier on. We're also seeing VVIX out there hovering a little bit higher. We've seen some VIX movement, go figure, of late. So it's a little bit higher than it was last show, about 84 right now, and it was about 79, so about 5 points higher than where it was about a week ago. So let's start there. Mr. Meatball, what is catching your, aside from the cold and all the snow futures that I'm assuming you're long out there, what's catching your eye out there this week from a vol perspective, sir?
How about how up and down it was? We've had volatility has had a volatile week, is what I would say. That I think is the key takeaway from this week is volatility was volatile.
So do you think VVIX, if anything, is a little bit under pricing what's going on out there right now?
Well, the futures didn't do anything crazy, but I'll tell you what did was the cash index. It went. Actually, the futures did make a nice move on Tuesday. I mean, that was a crazy up move. It was the peppiest I've seen those futures in a very long time.
They have been lacking a certain amount of pep of late.
I was a little surprised, right? I was a little surprised, but it was very peppy, and that was really all I kind of saw was, we saw a nice pop in futures. VVIX started to get some movement. This sell-off felt very different from some of the other ones that I've seen, in that it actually got a vol reaction. I think because it was very unexpected. But maybe that real vol pop is part of the reason why we know that maybe it's not going to last long term, because we saw vol get that peppy. One interesting thing of note is rumor is that we're going to be done with the government shutdown here in the next few minutes. So don't be surprised if we get a huge vol pop or a huge vol drop, because there are rumors that there's a deal reached. That was what was reported on Drudge
Oh, well, Drudge.
Just a few minutes
if Drudge says it, man, it's got to be true, right? This reminds me of the old SPX days where in the late 90s where Yeltsin's dead. No, this time he's really dead. No, this time my brother's cousin on a desk in Morgan in New York heard it for sure because his cousin is over there in Moscow, so that reminds me of that. I'll believe it when I see it, but hey, Drudge ostensibly is clued into some of those movers and shakers over there. We won't debate Drudge. That's a conversation. That's a long conversation for another day. Instead, let's keep rolling. You mentioned the futures kind of being a little bit pep. You're right. They had a little bit of pep in their step. Coming at Showtime now, they're kind of back in that little bit of a, I guess you can call it a humpbacked whale / flat. They are still flat in that mid portion of the curve. Right now, we're seeing that cash to the front month future out in Feb. There's about a 0.6 of a point difference between the two. The future got a little bit of a premium out there. We're seeing about almost exactly a point between the cash and the March futures 2 months out. Then the curve kind of flattens out again. It kind of spikes around February, and then it kind of vacillates around pretty much around 1860 all the way out till about July, where it gets up to 1875 again. Then it kind of hovers there till August around 1880, which is what we're saying before, listeners, where it's still a little flat, surprisingly flat in that mid portion of the curve where everyone's kind of like, I don't know what's going to happen. Could we go up? Could we go down? Could we stay here? We don't know. So we're going to keep this thing pretty much flat. And then you get all the way out to October and it has the temerity to go up to 19.5 out there. That's about the extent of it, which is kind of weird. I do want to get your boys, the Thompson twins, on one of these days, Mr. Meatball. I think we wanted to get them on this week, but it's just didn't work out. But it's just to kind of see, because these guys live in the futures term structure, right? So these are kind of weird. I wouldn't say unprecedented, but certainly weird times. I mean, maybe it is unprecedented, because I can't recall the last time we've been this flat for this long. We've had periods of this, but never. No. It's been weeks now.
No, things are really, really flat. We're finally starting to maybe see. But, we're finally starting to see maybe things shake out a little bit. But, it is. We are not there yet. And vol is definitely, vol is definitely up and down and loosey-goosey. So I'll be very interested to see kind of whether I'm right. Are we going to get a return to normalcy here? Because that's the way the VIX is pricing itself like it wants to be done. Like it wants to be done getting worked over. And the market wants to be done getting kind of crushed. But
it wants to be done getting worked over. I like that. It's like a heavyweight boxer in the final round.
Yeah, no, I mean, the curve is pricing itself like the SPX is coming out of risk off. But we'll see. If we do solve the government shutdown and we get a China deal, it'll be interesting to see what vol does.
It will be interesting as well. If the rumors are correct, then I would expect then we're going to be off to the races and vol going to take a nice break, shall we say, going into the weekend. Let's hope that rumor stays away for at least the rest of this hour so that my nice prognostication can come true. And then all the madness can ensue after that. That's fine with me. Going into what we're seeing today out there in VIX options land, it's kind of a bit of a quiet day out there, quite frankly, given the fact that we are moving a bit. And VVIX is getting a little bit more life to it. Still, the options not exactly lighting it up. Coming into Showtime, we had about 182,000 contracts on the old VIX options tape. If you're wondering how does that fit into what the average is out there, it's about 557,000 contracts out there right now, which is also pretty anemic. In fact, it's about 25,000 less than last show even. So despite the fact that we've been moving, VIX has been moving, the markets have been moving, we've seen some realized volatility, as Mark alluded to. VIX options not lighting the world on fire. The ADV continues to kind of erode. It wants to pop north of 600,000, and maybe it threatens it briefly, and then it kind of just comes right back down again. So VIX options not exactly dominating the tape, despite the fact that there's been some stuff. There's been some vol out there, which is interesting in and of itself. It's not like we're in a seasonal summertime period where people don't want to come out and play anyway. This is a time when people may want to play. We're coming up pretty soon on almost the 1-year anniversary of the Feb-ocalypse, the VIX-ocalypse, call it what you will, that just reshaped the entire vol landscape last year. So that people tend to remember such things. So you think they'd want to be playing around that time, but right now, at least, not so much. Let's see, though they aren't playing a lot, let's see where they are playing. Let's break down our top 10 hot VIX strikes. Let's see where the big VIX action is out there this week. Let's go from the bottom again, because Mr. Meatball, he tends to like it that way. Let's go number 10 on our rundown here. The Feb 25 calls, $1.41 open there for number 10. Again, kind of light numbers here. Number 9, our first put, at least from the bottom here on the list. The Feb 18 puts, 146,000 open there. Number 8, our old friends, the Ape 70s, still open to the tune of 157,000 out there, kind of lingering out there. An interesting strike selection, to say the least, but we've talked about that one before. Number 7, the Ape 37 halves, the comparatively reasonable Ape 37 halves. With what we got here, buck 60 open there. Number 6, 845s, 170,000 contracts open there. Number 5, the Feb 30 calls. Again, the 30 strike always manages to weasel its way into the top 10, usually 180,000 contracts open there. Number 4, the first May on the list, May 37 halves, 184,000 open there. Number 3, our second and final put on the list. Not a lot of put love out here, Mr. Meatball, which is interesting in and of itself. The Feb 17 puts, just a hair under 200K open on that strike. Number 2, the Feb 40 calls, getting out there a little bit. Feb 40, I should say getting up there too. Getting up there a little bit. 217,000 contracts open there. And the number 1 size position, I use size in air quotes there, listeners. The number 1 size position out there in VIX options land right now, the Feb 37 halves, with 332,000 contracts open there, which is decent size. But again, for number 1 in VIX land, we usually see 400K plus 500,000 or more open on that number 1 spot. But this time, again, it's kind of quiet period out there. So the overall size of the positions, not as big as usual. Total OI right now hovering a little bit north of 7 million. We got about 5.5 million on the calls and about 1.6 million on the puts. Mr. Meatball, what is cooking out there today, sir? We're seeing news that Trump's going to speak in about 10 minutes. So I guess we might be getting some ball after all, Mr. Meatball.
I think we're going to be seeing some droppage.
That might change the entire narrative of the program. But in between that, what caught your eye so far this week, sir, from a VIX options perspective?
Yeah, like you said, not a lot going on. There have been, some call spread buyers and things like that, but nothing really. I haven't seen anything really insane out of the option markets at all. We saw a nice little pop in vol when we got that initial, that pop on Friday or on Tuesday, but we didn't really see any follow through out of the overall market from that. That's the thing that was a little strange,
There's a lot strange about this market, sir. You don't have to look far to find strange developments in this market, including the fact that, he couldn't wait till an hour later, Mr. Trump, to come out. He might blow my entire prognostication out of the water. How dare he, sir? What kind of inconsiderate fellow would do such a thing to me, messing with my vol prediction? This is why it's so fun to be predicting vol in this type of environment, listeners, because you never know when that proverbial other shoe may drop, and we're going to wait and see. 8 minutes. This reminds me, Mark, you recall back a few years ago when we were doing the show on a Friday, kind of a quiet weekend, and then the news about the Hillary email investigation kind of reopened, and bam, off to the races. There goes NASDAQ, there goes everything, and it just completely reshaped the volatility landscape in just a few minutes. And by the end of the show, we were talking about a very different structure than we were talking about at the beginning of the show. We'll see. Maybe we'll see that here again. The fact that we're rallying already seems like the market's maybe baking some of this in a little bit.
Yeah, I agree.
So we'll see. Maybe that impact may be muted as a result. I mean, look at things like Intel screwing the pooch, and people don't even seem to care. So interesting stuff out here. Again, we'll pay attention to that. Meanwhile, while we're waiting for that to come out, this big vol event, let's look at what actually has been trading out here. Mark, this is the big trade of the day in VIX land right now. It seems to be kind of in line with what we've been talking about for a while, which is the just the willingness to keep playing up here in VIX upside. What do we got up here? We've got the Jan 32 halves going up for a whopping 3 cents, 15,000 times. These were no bid, which is funny. No bid at 12 cents. They went up for 3 cents, 15,000 times. So, and this is opening. So this is not closing pay. I first thought, okay, 3 cents. Maybe they had some upside and they're closing it out. No, this is opening. So this might indeed be someone just deciding to, shall we say, do some aggressive harvesting of the old risk premium, in which case I think we can all maybe debate the wisdom, the merits of that. Mr. Meatball, in your Carmen line endeavors out there, is there ever a moment where the spirit would move you to, shall we say, aggressively harvest a risk premium like this?
Yeah, if I think Vol's about to collapse.
That's true.
Right?
But for 3 cents?
Well, I guess not for 3 cents. You'd have to have some real collapse.
Yeah, I think Andrew might be tapping you on the shoulder if you put that one on. You might be like, really, 3 cents? But yeah, that's a fun one. I agree. If the vol looks like this guy obviously feeling the spirit of the impending vol collapse, but what if he comes out and you never know what you're going to get. All of a sudden, he says, actually the shutdown, we're going to keep going, and it's going to get even worse. Then there you go. Those 32 halves. They won't be at 3 cents anymore. I guarantee you that. So yeah, I've seen people do those trades before around earnings and times, and they thought they were pretty much there was free money sitting in the book, and then it came back to bite them. So an interesting one. We'll see. If this was closing, I would have much more of a favorable view on this. Also, seeing the other big trade going up today, looks like this is an interesting one. This may actually intrigue you, Mr. Meatball. Looks like it's a pretty tight put fly going up here in VIX. And it looks like they did it for, I think, about a nickel debit, I believe. It looks like the Feb 17 puts, buying those 7,000 times for 75 cents, then blasting out 2x, hence the fly of the Feb 16 puts, doing that for 37 cents. Now you got that on for pretty much a penny to the debit side, and then coming in selling out 7,000 more of the 14 puts. So a little bit wider on the downside there for 4 cents. So again, doing the whole thing for, looks like about a nickel or so. Buying those for 4 cents. So interesting, kind of giving yourself a little bit of room to run on the downside. I mean, this one, I guess, if this speech is to be believed, might not be a bad one. What do you think about putting on this whole fly? Looks like for about a nickel, sir. Was this a Carmen line trade? This has the whiff of Carmen line about it.
That would be something up my alley. I like that trade, but that is not us. I'm sorry to report.
Yeah, but I'm with you. I like this trade.
I know you're brokenhearted. Yeah, I don't mind it.
Especially I think even the Rock Lobster would like it because you're kind of almost getting your juice, not quite for free, but pretty close.
Yeah.
So interesting stuff here. Tight fly, one of the other size prints. And then we get a bunch of other weird upside prints going up today. 10,520 of the March 26s going on for a good 62.7 cents out there. So a little bit off the bid out there. Again, maybe a little bit of the old harvesting of the risk premium. March 35s also going up for a quarter on the bid, 10,000 times. So it does seem like they're in the 35s going up for 24 cents. Those are a little bit off the offer. So maybe a little bit of a vertical there, even though it did not go up as spread, and they did not go up at the same time. So maybe someone legging into a vertical there. But, it seems like in general, the narrative we've seen before is people are not afraid to crush themselves some upside. Yesterday was where we saw more paper going up. The big print we saw going up yesterday in VIX options. You probably saw this one getting maybe shopped to you, Mr. Meatball. I'm curious your thoughts on this one. It looks like initially it might have been a vertical financed by puts, a funky ratio vertical, but it seems like it actually went up as a strangle with, I guess you can call it a call kicker. It was the May 25-17, looks like strangle, sold for $2.44, $1.12 on the calls and $1.32 on the puts. And then against it, looks like they came out and bought a 6x ratio of the May 37 halves for 37 cents. Of course, that's right off the bid, so it looks like it may have been a sale on those, but that would make no sense to sell the strangle and then sell 6x of the way, unless you're just an insane person. I'm going to wager that they bought those, which is kind of interesting in and of itself. Obviously, with a VIX strangle selling, the thing you're worried about is the upside exploding, so that's why he's got this kicker. Mr. Meatball, what do you think about this one? If it did indeed go up, selling the strangle for $2.44, so you got a nice little bit of wiggle room there, and then if it starts kicking into the upside, you got 6x. Maybe that's where you can take some issue with it. That's a heavy ratio. 6x of these May 37 halves. At this point, really, you're just financing your May 37 halves. What do you think of this one?
Yeah, it's a huge ratio, but it probably fits with another piece of their portfolio or something like that. I doubt this is in a vacuum. It's probably related to some either vol position or credit position they've got somewhere else.
No, this is all done. I'm not sure if you're aware. All VIX trades are done in a vacuum, sir. There is naught else but the VIX pit and then a little bit of SPX next to it, and that's kind of it. That's all that goes up. So not much else lighting it up. But yeah, individually on the options merit alone, this is an interesting one. Maybe I think you could take a little bit of issue with the ratio, its size. So you're putting that premium back to work. That's for sure. So clearly this guy looking for an explosion to the upside and willing to lever it. Interesting. So a couple of interesting structures here. The put fly today doing it 7,000 by 14,000 times, and then this one doing it 10 times yesterday. Let us know which one you prefer, listeners. Interesting stuff out here. Also, clearly, he's buying that another shoe, and looks like maybe several shoes will be dropping between now and May, and he's willing to do it 1 by 6, which is kind of interesting. All right, let's go out here a little bit more to another product we talked a lot about last week, kind of a sad one last week as we're seeing the VXX. It was a boulevard of broken dreams, as we referred to it on last week's show. And then looking at here, this week we're seeing that the VXX at about 37, so it's pretty much almost literally unched from last week. It's like it's almost kind of sad itself. It's just kind of like, all my size OI is gone. There's no reason to live anymore. Today we saw about 40,000 contracts hitting the tape going into showtime, so kind of a weak day. The ADV just a tick under 200,000 contracts, so kind of light out there in VXX land. It's kind of funny, Mark, if you look to what's open now, because remember how long we've been doing that top 10 positions in VXX on the show. It feels like forever. And yet now with Jan off the books, the worm has turned completely. You look at the top 5 positions in VXX, and they are all calls. It is the Jan, what we got here? We got the Jan 56s, almost 26,000 open there. Then the Jan 65s, about 25,000 open there. 57s with about 24,000. The 55s with about 21.5. And then the 63s with about 20,000 contracts. You got to go all the way down to number 6 to even find the first put. The 38 puts, which are actually in the money right now, with about, these are 17, almost 18,000 open there. So Mr. Meatball seems like a little bit of a flipping of the script. Maybe all the put guys have kind of just been, they're just brokenhearted. They don't want to come back in and play, but it's all calls right now in VXX. Does that surprise you?
Well, you got a little bit of recency bias in this. And, we're still, VXXB is just becoming the new VXX. So, give it a few days, and I think you'll see some of that change.
We don't have long on these. They expire on the 25th, so these aren't long term.
Yeah. I think as you see some of that Vega get built in VXX, you'll see things change. And that'll make a big difference.
Yeah, I don't think the narrative has completely shifted in VXX. I think long term we're going to see those bears come out again. But in the near term, at least, maybe people got a little bit beaten up and they're deciding, let's try the other way, at least for another week until the new product comes online, the new version, I should say, out there. Interesting stuff. There are some puts still. If you go out into the top 10, there are some puts. The meat, the top 5 out there right now, all calls, which is different. Certainly, it's been a while since we've seen that out in VXX land. Again, a lot of the put players shaking out, maybe taking a bit of a breather on this one. Let's look at what the big trades are. There aren't a lot, and the big trades are actually the 38 puts right today. About 2,500 of those going up for just a tick under 40 cents out there. So actually, that's below the bid. Looks like paper crushing those. Maybe they went off a little bit late there too. That could be why that print is a little bit off. But it looks like someone harvesting the old risk premium, perhaps, probably closing out maybe some of these 38 puts, because there is size OI going on these, and they go away actually they're going away right now today. So yeah, I guess probably getting while the getting's good out there. Hopefully these calls, I don't know how big when these are put on, because if this was a very recent trade, then some of these, then yeah, not so much out there. All going away today. So again, this is kind of a repeat from last week. We're going to see the entire top 10 of VXX flip yet again in a week. So it'll be interesting to see what's going on out there. 37 puts also trading out here today, hitting the bid for 4 cents. So it seems like we got people getting a little bit out of Dodge here today, getting what bids they could find on these bad boys. We're still staying tuned. I don't think we have any news yet from what... Remember that they also have the indictment of his aide there to talk about, so Trump might be talking about that a little bit today, too. So maybe people are expecting more about the shutdown than they're actually going to get, which could also maybe spook the market a little bit. Speaking of spooking the markets, let's get out to it with earnings season. It is that time of year, listeners, a refreshing time of year for some of you who maybe are kind of sick of all the hand-wringing over the macro, what's happening here, what's going on with the shutdown there, what did Trump say here, what's going on with China, all these things that seem kind of a little bit ethereal, sometimes a little bit capricious No one knows what the hell is going to happen with them. It sometimes is refreshing to sink your teeth into a nice micro event like an earnings announcement. And they have a lot of them. This week, coming off of yesterday was a big day. We saw Southwest and JetBlue popping off in the morning, as well as American Airlines. So if you like your airlines, got your fill yesterday. After the bell, we saw my old stomping grounds, Intel and SBUX, popping off after the bell as well. Let's look at our old friends at ORATS. They actually crunched the numbers for us. You guys can look for this for yourself for free over there at theoptionsinsider.com. Just type ORATS, O-R-A-T-S, into the search bar if you don't see it there on the homepage, and all their earnings move reports, earnings results reports will all pop up. We're going to look at the results reports right now because that tells us how these things actually performed. And again, there were some big names popping off this week. Let's start with my old stomping grounds there. Intel, they were popping off after the bell last night. Coming out of the close, actually, I should say they were right around, going into earnings, they're almost $50, 49 and about 49.75 or so. And they were pricing in 235, which worked out to about a 25% expected vol. And what do they deliver? And again, this is coming into the open now. In the intraday, that could be a different story. Just coming into the open, how do they deliver from a pure earnings movement perspective? And they delivered actually 338 to the downside. So outperforming to the downside. If you saw the numbers, they were actually impacted by some of the iPhone slowdown because they're a supplier of parts to those guys. So that weakness out there, as well as some weakness in their data centers, kind of combined for a bit of a 1-2 punch, weaker numbers than some people had expected. And so they're off about 340. At least they were today, right now, off about 2.5. So they're getting some of that sell-off back. Not surprising. The market's in rally ho mode. So Intel at least outperforming their straddle to the downside. Starbucks going into the announcement was about right around $65. They were pricing in, they're pricing in exactly $2.50. So a little bit around 18% vol, actually it's about 20% vol going into that. And then they actually delivered almost exactly that. They delivered about a 230 move coming into the open here today. So not a huge underwhelming movement there as well. Looks like we got a near-term deal, Mr. Meatball, with a deal to fund the government for 3 weeks without a border wall. So that's what he's announcing right now. So let's see how that's impacting everything. Live here, Johnny on the spot. I mean, that's something.
Yeah, let's see what that does.
Maybe it's not a deal, though.
It's a temporary deal.
Temporary deal to relieve the impasse.
Yeah. Well, we're continuing to move. Vol is falling. Market is up. Exactly as we might expect.
Yeah, pretty much. Yeah, we're seeing.
Not a crazy reaction, but I think, like you said, some of this was priced in already.
Yeah, I think people were maybe expecting a deal to be struck. This is not the full deal. Obviously, this buys us 3 weeks, so maybe people had over-expected. Again, we see this all the time. High expectations. 3 weeks gives us time to maybe get our act in order over here. This whole thing, over $5 billion. Whatever you feel about the wall or not, that's immaterial. Just a $5 billion impasse here causing trillions of dollars worth of reverberations to the global economy as a result. So sometimes things get amplified perhaps beyond their limited range of impact out there. Let's keep looking at some of these other earnings really quickly here. Starbucks, we talked about those. We had JetBlue coming in yesterday as well. They were pricing in, that was before the bell, they came in at 17.25. They were pricing in about 80 cents. They delivered about 94 cents. So outperforming a little bit there to the upside. Big one was Xilinx. They were pricing in, they were closed right around 89.5. They were pricing in about $5 even, and which was about a 35% implied vol. They delivered almost $12.50, so pretty much blowing the doors off their straddle to the upside. Chips in general, outside of Intel, were looking pretty good there yesterday. So Xilinx kind of setting the tone to the upside there. That was actually on the 23rd, I should say. So it's been an interesting kind of mixed week from an earnings perspective, but that's what's kind of fun about this time of year. You get some nice developments out there in the world of vol. Speaking of developments, let's see what's developing with you guys. It's time to open up the old Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Yeah, we're seeing a bit of a move here, but not perhaps as a result. People were maybe anticipating a little bit too much here and not getting perhaps the big development that we had expected. But again, with the market rallying so hard going into this, it's hard to argue that some of this at least wasn't already baked in here. Yeah, we're seeing VIX pretty much unched from where it was a little bit ago, coming off a little bit, but not the crazy town that perhaps some had expected. We'll keep an eye on this, though. Things could certainly play out. It's like an earnings event. Once the news hits, there's some crazy movements in the beginning, and then things kind of settle out in the direction they're going to go. So maybe this will change. He could obviously say something else afterwards, which will change the narrative completely. So we'll keep an eye on this. It's always kind of fun to have a little bit of a live vol event while we're doing the show here. While you guys are playing along, make sure you play along with our polls and our questions of the week. This week, we're asking you guys kind of a broad one. I'd like to get your thoughts on this. Last year was, of course, a record year for the volatility market, and, of course, for the options market. All that volatility driving a lot of volume. We hit a record 5.1 billion options contracts changing hands last year. That's almost a billion contracts north of the previous year. So clearly strong year. Our question this week is pretty simple. Will 2019 exceed that, or will it not? I kind of have a feeling, I think I know where you're leaning, Mr. Meatball, but I'm curious. So what do you think? Think 2019 can do it again? Can it beat 5.1 billion, or is that a bridge too far?
I think it could. I think it's going to depend. The issue we're going to have is we would need, what was unique about 2018 is that we had two vol events, and that drove a lot of volume. I don't know that we're going to get two vol events in 2019, unfortunately, for the market. So if we do get two vol events, then I think you could see records break.
Uh-oh. Looking at you being a politician giving us a...
That's what it takes.
But you're right. That there was...
If true, right?
You're right. It was precipitated by two events, outside of Feb and October. Those were the two big drivers. Of course, people forget that January last year was actually a much more volatile and a much more high volume month than people maybe think. It all gets kind of washed down the drain. Everyone looks at February as the big starting point. And certainly that was the inflection point for the year, but Jan was actually a high volume month as well. So we're almost coming into the end of the January. We'll see how he looks on the books. But unfortunately, I think I'm kind of leaning there as well. I think that's a tough road to hoe there in terms of being able to exceed that again. So I'm unfortunate. I think I'm leaning no, even though I hope I'm wrong. I hope the industry lights it up and tears it up. At that industry event I was at last week, everyone was certainly quite bullish there from a volume perspective. And certainly our audience clearly is too, with about 78% saying yes. So I'm down. I'm feeling what you're putting off there. I hope you're correct. In my heart of hearts, I'm thinking probably no, because it's going to need a couple of systemic shocks, and we not get those. We're kind of back in this sustained period of more volatility, so we certainly can get more of those shoes dropping. But are we going to see another government shutdown? Are we going to see another trade war? Are we going to see another VIX apocalypse? Are we going to see another, worm turning aggressively as we did on October 11th? These are the things it took last year to really get us over that hurdle. And I mean, we'll see if we see those again, but it seems like a bit of a bridge too far here. Speaking of the weak volume coming on, we got regular commenter here, Pat Hennessy. He's the guy who sent in actually the notion for us to look at the year from an average of VIX closes, which is an interesting way to do it, as well as just predicting the end of year close. I think that was an interesting one. We added that to our prediction. He was following up with yesterday's numbers. He just said the options markets are absolutely dead. Yesterday, the lowest volume of the year, he says, in SPX options, and the second lowest in VIX. SPX was at 800,000 and VIX at 350. Those are pretty low. Again, the year's kind of anemic. We just started it, so of the year doesn't mean as much right now as it does in December. But still interesting. I think he said someone here said it best. Clients just don't care when the S between 26.25 and 26.75. I guess he's saying it's not juicing up the people, and clearly, I guess from the volume perspective, he may indeed be right. Let me just check here really quickly. Maybe we'll see if this little bit of vol out here is juicing VIX options to see if we can get a little bit more activity out here today. We're seeing still shy of 250,000 on the tape, 226,000 contracts on the tape, so still shy of even half of the ADV. So this recent little bit of vol turn, not exactly juicing up the markets out here a little bit, which is kind of interesting. Let's see here. We got a follow-up, Mark. Remember last week we had the listener write in talking about selling the 1x2, and then he wanted to get the call for free. And we even said it didn't sound like maybe he had misstated it because it didn't sound like the way he wanted to do it is not what he said. And we also kind of questioned he did it. It sounded like he did a deep in the money one, which is also was a little bit questioning. So I asked for a little bit of clarification because it didn't sound like that was what he had on. And he followed up. He said, "Hi, Mark. I was able to listen to Vol Views this morning on my way to work. Thank you for reading my questions. Here are a few answers to the questions that you posed." By the way, I'm going to just read off his original question. He said he sold the March 15 call in VIX and bought 2 of the March 19 calls. The future was just under 19 at the time he did it for a nickel credit. We both said, huh? That's kind of weird. But he went on to say he misstated his position a little bit. He actually bought the 1x2 for a nickel credit. So he bought the 15 call and he sold 2 of the 19 calls with the future at 19 for a nickel credit, which is interesting given the many times we've talked about having kind of net short units in VIX land. An interesting way to approach it. He says his strike selection is, he said he uses toss to place his VIX options trades. He says it's a pain, though, because we talked about this before. I thought they had fixed this. Apparently not. They base the P&L and the moneyness of the options on the cash and not the futures, which is madness. How can you offer a VIX options like that? That makes no sense. It seemed like the 15-19 1x2 will immediately show a profit on any vol spike, but maybe I didn't get that right. Also, he was thinking when VVIX gets near 80 or less, that was a good time to try these types of trades. Do I have that wrong? So I'm going to try and close for a small loss and try moving it up and out to April maybe. Thank you. And he followed up again with saying he closed the position out a couple days ago for 7-cent credit. So it didn't do poorly on the trade. This is a couple of things to talk about here. First off, I think in general, I'll let Mark give his views, but in general, we take a dim view on crazy naked net short units to the upside in VIX. We've seen how that could come back to bite you. If you're going to do that, you may want to have maybe more of a fly, so you have some sort of kicker, a few strikes up that can kick in case the worst comes to pass. Look at the guy today with the 1x6. He has the upside kicker. You don't have to go that crazy, but maybe a 1x1, so in case the worst comes to pass, you at least have something to prevent you from getting wiped out, because you're short pretty much at the money at that point in VIX, which can be dangerous. And we've seen that many times just in recent history, how much that could burn you. The VVIX, we were talking about the other way. We were talking about VVIX when we want to sell the 1x2, which is the way we typically do this trade. So maybe let's look at it that way, Mark. He's got a couple of new data points for us. First off, do you like the 1x2 the way he's doing it, buying 1, selling 2, kind of an in-the-money 1x2, which is interesting. Do you like that, A? B, do you like it with the VVIX low? I'm not sure that makes much of a difference for the 1x2, but...
No, I don't like this trade at all.
How did I know you were going to say that?
I got to be honest. I don't like this trade at all. I think I would if we were a lot higher and the VVIX was like 110. This trade makes a lot of sense. But here it does not. I don't get. I think it's highly risky and has limited upside for you. There are better ways to trade VIX mean reversion than this trade. And 2, don't trade VIX options if you're using Thinkorswim. You can't do it. You don't get proper Greeks. You don't know what your actual risk is. Everything it gives you is wrong. So, sir, you sound like a perfectly wonderful gentleman. You're doing everything wrong. Stop.
Just mince words a little bit for us there. But, it's funny. The toss thing, that's so ridiculous. I had assumed they fixed it. I haven't played around with toss in a little bit. Clearly, I got to get back in there and look at this. How can that be?
No,
that's madness.
They don't care.
I need to call those folks.
That is why.
I've had the TD guys in here. I thought they had fixed that. I would have given them a hard time about that. Next time they're in here, I'm definitely going. That's untenable. You cannot price VIX. That's like how your proverbial grandmother in Iowa wants to price VIX options, but that's not how you should do it. Oh wow, so much to unpack there. And yeah, this naked short units. I'm not a huge fan of that, Brian. I can see what you're going for, but there's better ways to do it, safer ways to do it. Check out some of our archives because we talked about that many times. There's a whole narrative to this about getting short VIX and doing it perhaps in safer ways than this. Naked short units to the upside in VIX, that's a crapshoot, and that could come back to bite you hard. Particularly here, you didn't give yourself a lot of room to run. This could come back against you very quickly. It doesn't take much of a VIX move. Let's say Trump comes out today and says the opposite of what he said right now. Well, there you go. That short unit's going to start biting you very quickly. So, yeah, we want to see you be around for a long time to listen to the show and trade them up. So we don't want you to get bit by this. I get the temptation. Everyone out there gets tempted by the short units. That way lies madness. Let's see. We'll wrap it up here with Layback. Question from Layback. He wants to know. He says, with Intel screwing the pooch after hours, I wonder if Mark could talk for a bit about his timeout in that crowd, how it differed from SPX from a vol perspective, and trading it during down moves like this. Thanks for the show, guys. I'm a loyal listener from way back. Well, yeah, you must be because, I spent time out there. It was actually, your question's interesting because it was a bit of an education for me coming from the S, which is a different beast entirely. And, obviously there's a net bias to the S and we're in all indices where people are net buying puts and selling calls. But within that, you have this entire spectrum of trades that are going up all day long, and you're quoting all the weirdest crap you could possibly imagine. Some guys calling you up. I got a 1 by 6 by 3.5 by 2 by this month by that month. Hey, how's that? And then you quote it all up, and the guy wants to do it with you. So it's a lot of time wasting, but you get all of that kind of stuff going up out there all the time. Going to Intel, it was a markedly different beast. And remember, this is a different time frame, too. This was kind of towards the tail end of the dot-com bubble, right before it burst. So Intel was kind of the Apple of today. It was Intel and Microsoft were leading the dance on everything. And so where Intel went, the rest of the market followed. So it was in every major fund that had exposure to tech. And back then, it was all of them. So they all had exposure to Intel. So guess what they did? Pretty much every cycle. Whenever a new month would come on the books, what did they do? They dumped all their calls and they bought all their puts. So it put you in a very awkward situation as a market maker because you knew that skew was going to come against you pretty hard, to the point where when a new month would come on, you'd actually just go start looking in the book and say, okay, is there a bid for calls here? Anything reasonable? Okay, sold. Okay, are there any puts out here that are offered for anything even remotely? Okay, buy it. Maybe even trade with the guys around you. You almost had to front run the paper a little bit because you knew it was coming, and it was coming for size, and you couldn't really get away from it. And so it was weirdly probably the most biased paper flow I've ever had to deal with, which was a challenge in and of itself. Anyone who's had to deal with predominantly one-sided flow over and over again, that gets kind of hard. And then you had the environment where, of course, multiple listing was kicking in, so you had to match away markets. And all of a sudden, you're in this kind of weird game where you're trying to have to almost fight for flow against other exchanges while you're trying to survive this weird one-sided biased environment. It was challenging, I think, to say the least, and probably one of the things that made me decide, this part of the game, this day-to-day market-making part of the game, with all these other things, with pennies, with payment for order flow, with competing with other exchanges, on top of this kind of one-sided bias, on top of the fact that brokers are coming in now and facilitating flow to match other orders and doing it on your bid and on your offer so you didn't even get a piece of it. All of those things are kind of combining to maybe show that particular trajectory of the market-making liquidity provider didn't really have a long-term future to it. It was interesting times, and they had a day like this, only much worse when I was out there, which was probably one of the more interesting trading days of my life. Maybe if we have time another day, I'll regale it. But they sold off hard, and they had, I think, pre-announced bad earnings, bad guidance mid-cycle. Back then, they didn't do that, particularly in the go-go tech times. There was maybe a bit of a sign that the writing was on the wall for the tech boom, and it was crazy town out there, which was fun. I don't know, Mark, did you ever spend – Intel was big on the Amex. Did you ever spend any time out there?
I knew all the guys over there that it traded a ton, and they traded. Yeah, all those guys were like 1,000, 5,000, 10,000 up in Intel, and you had that a lot. We had buy right Monday. We used to call the Monday after expiration because you'd spend 3 hours in the morning just taking the other side of buy rights. And, we would start off with the day with vol as low as we possibly could, thinking, boy, this ball's cheap. And then there would be so much selling, they would take it even lower.
Yeah, exactly.
There's always...
No one's going to want to sell it here.
Amazing.
Oh, wait, they all want to sell it here.
Yeah, they don't care. Sure, I'll take it. Thanks. And then, a couple days later, we just mark the ball back up. And because there would be BDs, BDs would start stepping in and buying it. You'd say, no, thanks on that. We're not gonna give you this vol for this cheap. We're the only ones that are going to get that. And then we would, and then the next thing you know, we've moved, we're back to normal. But, it took a day or two for things to get normal. That was just the way it was.
Intel never had that normalization phase. It just continued ad nauseum. Buy right Monday was buy right Tuesday, was buy right Wednesday, was buy right Thursday, was buy right Friday. You never had that BD respite, unfortunately. So yeah, it was a challenging, interesting time. Certainly maybe a little bit different than Intel is right now, which is also interesting in and of itself. Let's see how interesting our prognostications were. It's time to open up the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we attempt to prognosticate where the capricious, the just endlessly bizarre VIX cash will be, or if you're on toss, the driver for all options will be at the end of showtime here. And coming at the end of showtime is pretty much not that far from where we started the show. So all this Sturm und Drang about all things Trump announcement, kind of not really moving the needle a whole heck of a lot. We're seeing a little bit shy of the 18 handle, which puts me a little bit pretty good for where I was looking. Coming in, let's just do a little refresh to get it exact. Yeah, so we're coming in right now. We're at about a 1780 or so, which is pretty much puts me as the winner. I was 17 and a quarter. Remember, I was thinking, it seemed like we had enough going on to keep us relatively elevated throughout the rest. At least not elevated, but around the same level we were that time last week, which is, of course, what I was predicting. Mr. Meatball was downside a little bit. I was liking what he was selling, but I didn't think we were going to get there. He was at 16 and a quarter, so I'm about a little bit less than 0.6, about 0.55 away. He's over a handle away, so I'll take the victory. I'll do it. This is what happens to Meatball when I get away from all the other nonsense. I stop trying to add in the fudge factors. I just go back to my core VIX gut. Then the wins start coming again. I can't mess with that. I should have learned that over time, There's a reason I've been winning this thing all these years. It's because of the core VIX gut. It's on. So let's see what the core VIX gut. I'm going to go first this week because let's see here. Let's see what the old core VIX gut is telling me for this week. So, of course, we had the big quote-unquote vol event a little while ago, and it really wasn't much of a vol event. So that gives us a little bit of a punt on that for the shutdown, at least, for 3 weeks. Still got the big boy hanging out there, which is, of course, the trade war, the endless will they, won't they. Oh, it's off again. Oh, it's on again. Oh, it's looking good. No, it's not. So a lot of that nonsense. We have the indictment that came out this morning, but that seems to be not really adding a lot of vol to the space as well. We got earnings season, which usually in the aggregate tends to damp down volatility. I know obviously some of these individual names can respond violently in a very volatile fashion, but in the aggregate, it usually tends to tamp down volatility. A long way around to saying I hate doing this because this is kind of like what the Meatball does, and I always give him a hard time for it. But I kind of like where I am this week for next week. So it means we're going to be off a little bit from where we are right now, about half a handle or so, but not quite an annihilation, not quite a spike of VIX. I'm going to do it. I'm going to say 17 and a quarter again. I kind of like that. The old VIX gut is leaning me in that direction. Mr. Meatball, are you going to fade us here again, or what are you feeling next week?
I've never been one to deny your gut.
Sometimes you'll even feed it on occasion, which is also nice.
Yeah, I know. I've definitely fed your gut a few times. Yeah, I think I want to stay lower. I think we're going to see a 16 handle for next week. I got to be honest. 16. What was I? 16 and a quarter last. You were
16 and a quarter last week.
Last week. What was it? 16 and a quarter.
Yes.
I'll take that. I think I'm going to be right this time.
Both of us.
Look out.
Both of us feeling our oats from last week yet again.
Yeah, super exciting, huh?
Very exciting. We shall see if, as we play the wrong music here, there we go. We shall see which of us whose gut is right at the end of the day. So we'll see. You guys have your own prognostications. Hit us up. Are you feeling higher vol? Are you buying what some of these VXX call buyers were buying? Hopefully they got out of those. Not much time left on those. Trump was their last shot. Didn't really work out. Or maybe you're buying more downside. Maybe you're going below the meatball. Maybe you're feeling annihilation, 15-14 handle out there, which of course would price all your toss options at just crazy town. That's a conversation for another day. Instead, let's go back, Mr. Meatball. If people want to learn more about how to deal with this stuff, maybe Brian wants to check out some of your stuff on how to do some verticals in VIX options. Where should he go? What should he do?
Yeah, I've got a free webinar on Tuesday on risk management, on using options to manage risk. And it's going to be pretty good. You go to optionpit.com/risk2019 and you can attend the free webinar this Tuesday.
That's optionpit.com/risk2019. That's what it is.
Risk 2019.
There you go. Check it out. Risk 2019. It's free. You can't beat the price. And maybe after you like it, maybe you sign up to join some of the crazies in the pit chat over there. They're all crazy in a good way, of course. I say it with love. The crazy in a good, crazy for vol way, which is kind of what you like out there. So if you wanna share some memories, share some pain, maybe discuss your verticals with other vol traders out there, Pit Chat is the place to go at optionpit.com to learn more. Register for the webinar. Right? It's free. You can't beat it. And on behalf of the Meatball, we'll even give a shout out to the Rock Lobster. Why not? Whatever the heck he's doing. He's out there somewhere doing something, loving himself some vol probably. And indeed myself. I want to thank all of you for downloading, streaming, subscribing, sending in such great questions. Keep them all coming. And we'll see you next week for more Volatility Views.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.